What's up, guys? My name is Andrew and welcome to Broke Man Finance. Today I'm listing my top 5 reasons why I think you should invest in the stock market. If life teaches us anything, it is to expect the unexpected. 2020 by far has been the greatest example of that. Having the ability to invest your money and let it grow over time provides me one of, I think, the greatest non-constitutional freedoms of the 21st century, and that is financial freedom. So let's jump right into it. And reason number 1 is simply the ability to overall grow your money. Putting your money into the market and letting it grow, whether it's a strategy such as bonds, stocks, mutual funds, it allows you to put an initial investment and continue to add to that investment if you choose, and let it grow over time. Emergencies in life happen, and having an account, whether it's $1,000 or $100,000, and being able to liquidate that account and cover life, whether it's a new investment rental, whether it's something for your children, it's college, or if it's an emergency, having that ability to really withdraw that money instead of taking out a loan or putting that expense on a credit card provides you a simple and practical approach to managing your finance. For example, if you put $500 a month into an account for 30 years, with that put a modest 8% annual rate for the calculator, you would have over $70,000 in the account at the end of that 30 years. So reason number 2 is retirement. In today's times, a lot of corporations have really abandoned traditional pension programs that we saw 20, 30 years ago. And instead, they've went towards the 401k style retirement program. Most of these employers do a percentage match, meaning if you put a certain amount of money in there, they will match it. For example, my employer matches up to 5%, meaning if I put 5% minimum in there, they will match 5%, giving me a 10% average investment into my retirement account. The good news is, since 1929, the S&P 500 indexes, which is one of the most popular indexes and one of my favorite indexes that I use to invest off of, has averaged around close to 10% a year. For example, if you put $500 a month into an account that averaged 10% for 30 years, you would have over $1 million in that account at the time. Now, if you're like me, I don't really put much faith in the Social Security system. I think it's a great idea, and I'm not knocking it by any means. My parents and my grandparents who utilize it. I just don't put all my eggs in one basket. I don't put 100% faith in the United States government on controlling my money or managing my money for me. So that's why I utilize 401k style programs or other IRA style programs. And it really kind of puts me in the driver's seat of my finances. And at least from my mindset, it provides me a financial future, or at least the goal of a financial future as I get close to being able to retire. Reason number 3 is inflation. Inflation is just so simple fact of the economy. It happens every year. Sometimes inflation is higher and sometimes it's lower depending on the GDP. That is a whole separate video. But the reality is inflation exists. The average savings account that people have produces less than 1% interest each year, while at the same time for the past 30 years, inflation has averaged around 3%. So really putting your money into a savings account and thinking it's okay, think it's going to be there for you in 20, 30 years, simply isn't the case anymore if you take into account of inflation. So investing your money, as I mentioned before, like the S&P 500 index, has an average growth around 10% each year. So if you take minus 3% of 10%, that's going to give you a general 7% modest return on some type of money or some type of account that you're putting your money into. Of course, as minimum wage increases and general wages increase, so will inflation, depending again the GDP and other factors of the economy. So keep in mind as you invest, or if you choose not to invest, inflation will always be there. To what percentage, we don't know. It always fluctuates each year. So investing in the market and really keeping your money above that inflation rate is a simple and practical approach. Reason number 4 is taxes or taxable income. Putting money or utilizing the pre-tax option into a 401k or IRA program can potentially save you money. At the end of the year, we all know people are scrambling to get their 1099s or their W-2s together, because January and April of the next year, you have that time frame to submit your taxes. And being able to contribute to a program pre-tax, it allows you to kind of control your taxable income. An example would be if you make $50,000 a year, you deposit $5,000 throughout that year into your account pre-tax, your reported income to the IRS is only $45,000. So again, those numbers can vary depending on if you make more or if you invest more. But sometimes people use that as a way to keep themselves out of a higher earning tax bracket, and it benefits them at the end of the year or the next year on their federal tax returns. Again, this is something that you would have to reach out to your financial advisor or your tax preparer, and they'll be able to walk you through the ins and outs on how to document and utilize losses in the stock market for your taxes. And then the last reason is reason number 5, and that is simply helping others. If you're like me, it feels good to help someone. Humans in general like helping people. We see that throughout the year, especially when it comes to Christmas times, whether it's the Salvation Army drive that the NFL puts on, or if it's something that helps your local animal shelter, the children's shelter, veteran organizations. There are millions of different organizations or programs, ways to help people out. And I think one of the biggest ways, or one of the most popular ways that we've seen in the last couple of years, is GoFundMe pages. For example, GoFundMe alone, according to the website, has raised over $9 billion since 2010. Having your ability to grow your money and help out others is one of the most rewarding acts we as humans can do in this world. And investing your money only means the more money you invest, the more money it grows, which in return means the more you can help out people if you're one of those people that like helping people out. Of course, there are many more reasons why you probably should invest in the stock market, but these are again just 5 real quick reasons that I came up with that I've utilized over my course of investing. There are other ways to grow your money in a passive environment, whether it's being a venture capitalist or investing in the real estate market, which I also strongly suggest. There are plenty more videos detailing how to invest in the real estate market. Now, if you've never invested before, please feel free to check out the Robinhood app I put in the description below. If you click on the link, you get a free stock, as well as I get a free stock simply by signing up. There are no strings attached. I will tell you, you're probably not going to get a Tesla or an Amazon stock. It's probably going to be somewhere between $5 and $10 worth of value of a particular company. But either way, you're starting off on the right foot. You get a free stock, you're already in the plus, and it's a win-win. Technology and applications have made trading stocks and buying stocks and selling stocks so easy right now. There's so much information, data, and research available to us 24/7. It's a no-brainer and an easy way to get started. Of course, there are risks associated with investing in the stock market. So if you're unsure, if you have a lot of detailed questions, please reach out to a certified financial advisor or certified financial planner, and they'll be able to walk you through the ins and outs and the risk associated with investing. I hope you enjoyed the short video. Again, if you're new to investing or if you have advice to new investors, please put those in the comment section. This is all about helping each other out. And as always, thanks for watching the video. Stay safe, and we'll see you on the next one.